Hi, good morning. You're watching The Market right here on 18 hour with me, Aisha Faridi, Nikunj Dalmia, Avan the Bash in the studios. And we've definitely taken a pause. In fact, yesterday as well was no better. About 0.5% of a downtick for the better part of yesterday's trading session is where we spent time closing in just about defending that 21,500 print. And to add to that, we're pretty much aligning with what the global cues as well have been, because even for the US equity markets, for instance, Nasdaq has fallen for a fourth consecutive session. You've got the dollar index, which is now near a 3-week peak, and the 10-year yield has hit that 4% mark. Oil price is back at 78. So the market construct really doesn't change from what it was yesterday. Once again, a weak handover from the globe as well.
Yeah, nothing exciting.
Yeah.
Your muscle memory, which is the short-term market action, October, November and December, spoilt you.
Yeah.
Every day there was something for the bulls. Every day, US markets was giving you a leap up. Flows were almost, the appetite to buy into Indian stocks and global equities, I think, was insatiable. Now I think we are doing what markets should have ideally done long time ago. They are consolidating. And I think this is pure consolidation, both at the global level and at the local level. I will consciously not use the word reversal. I will consciously use the word pause. I will consciously not use the word that the tide has turned, but I would say that the bulls right now are taking it slightly easy. I think this is a fair market. This is a market where if you consolidate, if you spend some time, just get your energy levels back, prepare your portfolio for the earnings season, maybe some pre-budget rally. I know this time that's vote on account, but historically pre-budget, price action. So I think you actually would be seeing price action only when you will see earnings season or you will see commentary coming from management now. So the bias is flat. It's not up, it is not down, and markets are simply consolidating. And I think this is very healthy, because if markets would have not consolidated, then we would have reached what could be called as a frenzy level. The strategy is that you want to be a buyer on dip. That does not change. See, in October, November, December, you were buying higher and you were selling higher, which is that it was imperative for you to stay in the market even and participate at higher level. Now you'll have to buy closer to the support levels. I think we would reach there in next 2 or 3 days, 300-400 points on the Nifty. But you want to be a buyer at that time, rather than saying that, okay, I will get prices at my level. That will not happen.
Yeah. And, just to, cement that point further in terms of the kind of range that we've been at, take a look at the last 6 trading sessions, and 21,500 to 21,800 is what we've been confined to. So that clearly has been a very range-bound market at hand. Yesterday, third straight day of losses, and pretty much you had consolidation. It seems like the likes of an HDFC Bank heavyweights like an Infi as well felt the heat. Well, on the flip side, you did see the the PSU Bank Index hitting a record high, and IT really succumbed to selling pressure. A lot of those heavyweights cracked in trade, seeing its biggest fall in the last 5 months. So even when we're looking at the texture of the market with that December euphoria waning, a lot of the heavyweights seem to be feeling the heat.
It's consolidation, Avan. Let's see if now what you would ask, and what you need to perhaps now figure out is that will a consolidation in large cap, will it kickstart a moment of volatility or a reversal in small and mid caps? So typically, when global cues are flat, when markets are not going anywhere, flows have not been that bad, negative flows are not there, will the bias in some of those overheated small and mid cap stocks, could that be negative? Or they will also consolidate in line with the larger market? I would say that downside in small and mid cap stocks in the near term, perhaps of 5 to 10%, cannot be ruled out if markets continue to consolidate, because that's where everybody would in a sense get anxious. Arey, market kahin nahi ja raha hai, time to book some profits. I will not be surprised if that narrative actually comes in. I mean, remember, January has not been a great month. History has told us that 7 out of 10 times large cap stocks have gone down, 6 out of 10 times small cap stocks have gone down. There could be a skim from the top. I mean, there could be like a, some seasonality and some weak players could be coming out. So the template is global cues are flat, large cap stocks are consolidating. Will small and mid cap stocks, will they get into some kind of a downward spiral? I'll tell you what I would like to flag off here, and this is one data which I think is very important, is you look at flows, because a lot of attention has been centered around flows. January 2024, FIs will come and they will be buying with both their hands. Now this is the flow picture. 2019 pre-COVID, hello sir, they didn't come. It was a long Christmas holiday. 2020, this is pre-COVID, Aisha Awan. COVID did not hit the world. 2020, they were not buyers at all. 2021, this is after COVID when markets had recovered, FIs were not back. 2022 and 2023, which are more important numbers, it's a negative number, Patricia?
Yeah.
I rest my case.
Imagine. Yeah. Numbers speak for themselves.
Numbers speaks for them. So
Yeah.
imagine if this scenario happens.
Yeah.
We all are assuming that FIs will come. I double check with Patricia on it. If this comes out true, which may happen, 2022, 2023, there's nothing scary in the world. But if the flow is negative, which it could, then we're looking at a different market. Because everybody is assuming that it's going to be plus 40,000, not minus 40,000. So this is my limited case that markets are really relying a lot on the so-called FI money to come and bid prices higher. What if? So ask yourself, what if now?
Yeah. But the consensus calls in the street, I mean, for Nifty's December target, they're anywhere between 20,200 to all the way up to 24,000.
Yeah, so let's look at the most bullish consensus. The most bullish consensus, I think, most bullish number, I think, is Jeffries. That's 24,000.
Yeah.
I'm not saying.
UBS is 20,000.
Yeah, 20,000. So what is Jeffries saying? That frankly, from an index of 21,000 to 24,000, if it's a most bullish scenario, that's about 10%. And UBS is making a case of a flat year. So nobody is making a case that it's going to be like a year where you actually will be growing higher than the long-term average. See, anything about 12-13% is the long-term average for Nifty compounding. So at the beginning of the year, brokerages have come out and said that it's going to be a flat year, and best case scenario, you will be compounding lower than what you've compounded historically. One. Second, consensus view on metals, that it's a sell. Consensus view on banks, which we all know. Where I think the differentiation is coming for me, I think is IT services. There seems to be a consensus by that IT has become cheap. There seems to be consensus by that IT will do rather well. There seems to be consensus view that these are great, fantastic companies and they will come out of this so-called, abyss they've hit into because of AI and because of demand destruction. So out of that, metals function of China, no one can guess anything there. And IT is where I'm surprised. This is another graphic which is surprising me. Consensus buy calls. Where is HDFC Bank in this? So HDFC Bank actually is not coming up as a consensus call. That's interesting for me. And then you got individual stocks. Cities got IndusInd Tower, HSBC, Nykaa. Those are individual calls here. But for me, the surprise bit here is IT is a consensus buy, and HDFC Bank is out of the consensus view in terms of what the brokers are saying.
I think we've picked up just the top 4 stocks. I'm sure it's there in the list.
It's there, but it's not making us part of top 4. For me, that's
it's ICICI Bank, Axis, Reliance, L&T.
Maybe everybody is so tired now. I don't know. All I'm saying, it's not there.
Yeah.
Maybe it's not there in top 4. Let me put it this way.
Yeah. But the Q3 updates so far have been quite okay. I mean, all the ones that came out just yesterday as well. It's an inline set from Bajaj Finance, from Ujjivan, and good actually from IndusInd Bank as well as IEX.
See, Bajaj Finance is growing at a rate which is higher, in line with the marginal positive bias. And I'll tell you why these numbers are important. Not because of the growth rate number. These are important because that was a quarter when they were hit because of what Reserve Bank of India in a sense indicated to them. And everyone thought that Bajaj Finance would be consciously slowing down their business because of what messaging they got from Reserve Bank of India. But despite that, if they are growing at about 35% plus, 7% quarter on quarter, which actually is in line, and it's actually slightly better if you ask me. I will say they're slightly better than what the street view was. I think you got to doff your hat to them. IndusInd Bank, I think the turnaround is visible. Quarter on quarter, the CASA ratio, the growth what they have, I think is visible. Whether it is small bank or large bank, the banks are growing. And that is what the exciting part is, Aisha Aman, that if banks are growing, for me, that is a indicator of where the economy is. Bank is a representation of credit. Credit is a representation of demand. Demand is a function of productivity. Productivity is a function of real underlying growth. And the growth, I think, is across categories. Retail, SME. Bajaj Finance is retail. IndusInd Bank is corporate. SME banks are largely MSME. So all categories are right now showing growth. And we are talking about December number. This is not like a passe number. Yeah. So October to December, the economy did well, which means numbers are going to be good. Now, whether markets have run up, how markets will digest them, let's see.
Okay, yes, indeed. That is going to be closely watched out for. By the way, what's going on across the rest of the globe? You've got the major indices in the US, which pretty much lost ground. Fed minutes talking about the fact that interest rate cuts are likely in the year ahead, and you've got Asia mirroring that. So, in light of that, let's find out what the global commentary is centered around. We've got Vinny here to break it down for us. Vinny, morning.
Good morning, and I'm going to start a commentary that has come in from Fed's Richmond President Birkin, who's highlighting in terms of the March cuts that we're expecting over there. That's still a pretty long way that one could expect. Components important for conviction on the inflation part is something they're watching out for. And soft landing increasingly is conceivable, is that's what he's saying, and it's not inevitable is what he's highlighting. That's the main commentary that has come in from him. Other than that, he's highlighting that inflation has come into a range of Fed's 2% target as of now, and housing, service risk inflation are leveling off above the 2% mark. Drop in the long-term rates may stimulate demand for homes. That's what one is watching out for. But on the back of that, then we have commentary and a tweet that has come in from David Rosenberg as well, who's highlighting in terms of the manufacturing data, what is that indicating? He said that, that's showing a bit of a contraction coming in, which points towards that recession is still a possibility that could come in, even though everyone is saying that US recession may not come in. The proof is there that, because of this contraction, a possibility is there that we could see a recession coming in. And he's furthermore saying that, the last time that we'd seen this data over here was in April 2009, when the economy did enter a recession. So yes, still concerns for him is coming that there is a possibility of a recession, seeing the data. Other than that, last commentary we have is from Peter Schiff, and this is on Bitcoin. Firstly, obviously, we've seen Bitcoin at that 45,000 mark. Then last night we saw a correction coming in, especially because of that in terms of the ETF. That may not happen, or, the approval that is still left. So he's highlighting that, the speculation is still left in terms of Bitcoin ETF, and that is what is causing a bit of a risk in terms of the fall for Bitcoin prices as well.
We'll leave it at that and welcome on board Jeff Dennis as well, try and analyze what the Fed minutes indicate. With him, Jeff, hi, good morning and good evening to you. I think the most alarming statement has been from Fed's Barkin, right? Indicating that further interest rate increases are possible and still being considered. That's not going to go down well with the markets, I presume.
No, I think it's been one of the factors that have led to this very, very weak start to the year. I mean, I think the market was very, very vulnerable to some profit taking, which I think this is all this is, frankly, at this point. Obviously, very, very strong December, very strong fourth quarter. It was a sort of perfect rally, priced for perfection. And I think as soon as there's any doubt brought into this scenario, in particular on when the Fed may cut, and indeed could they possibly even raise interest rates again, I think there was going to be a fair amount of profit taking. And obviously you've seen bond yields go up at the 10-year end by about nearly 15 basis points off the low. The dollar is stronger. All of this is contributing. But I don't think anything much has changed, frankly. Obviously valuations are high in the US and indeed many other markets too. But at the end of the day, Barkin may have caught the market when it was very vulnerable to a sell-off, but I'd be still very, very surprised if the Fed raises rates again.
Mr. Dennis, what we saw in 2023 was largely a function of those, massive US tech stocks which rallied on back of AI. Now, AI is not new. It is not going to be the new idea for 2024. So what could be the trigger in that case?
I mean, for a start, I think it's going to be a more subdued year than 2023 was, at least in the US. I think EM is maybe a somewhat different story. That very much will depend on how China does. I think it's going to be a more conventional year, although, to be fair, although AI may have been a big driver of the tech stocks, the tech sector, the NASDAQ, and, of course, the so-called Magnificent Seven. At the end of the day, as I said earlier, you had a perfect storm later on of lower bond yields, a softer dollar, sense that the Fed has got to the peak of interest rates, and all of that was encouraging investors to move into equities. And I think the reason why, despite this slow start to the year, we should be mildly bullish, I would just say mildly bullish for 2024, is because I do believe there's a very good chance we will engineer a soft landing here in the US. In other words, there won't be a recession. The Fed will cut interest rates, although maybe not until towards the middle of the year. And all of that, I think, ultimately will bring money back to equities. And I think, therefore, the driver is going to be much more a sort of conventional market move, I think, driven by, optimism the economy could be able to stabilize without going into a recession. And we'll see a modest growth rate of the economy in 2024. And that's going to be the driver of stocks. But clearly, what's very important for stocks is that interest rates eventually come down in the U.S. and also bond yields tick a little bit lower. I don't think they're going to go much lower, but I think they could go 20, 30, 40 basis points lower over the course of the year. So it's going to be more conventional macro triggers, I think, this year.
Thanks very much, Jeff, for giving us those details. Let's chart levels and individual top stock recommendations with CA Rudramurthy and Kunal Botra, who's right here with us in our studios. Kunal, the last 6 trading sessions have seen the markets in a pretty tight range, 21,500 to 21,800. Yesterday as well, we did come under a bit of pressure. What is this indicative of, given that this phase of consolidation is likely to remain prolonged?
Yeah, I think the indices could remain into a consolidation, and my sense is that the consolidation may probably continue for at least another couple of weeks for both the benchmark indices, Nifty and Bank Nifty. And I think it should be healthy because after that 3,000-point rally for the index, for the Nifty specifically, there's bound to be a phase of a pause as well as a phase where the index goes into a mild correction. What we've seen right now is just a retracement of 300 odd points on the index. On the other hand, I would also believe that stock-specific price action would still continue to be a bit more stronger. There is no major change in terms of the open interest data. Like, for example, yesterday we were flagging that there's been a good amount of short built up on the Bank Nifty futures. Yesterday's data indicates that there was a good unwinding of almost 12.5% of open interest on the Bank Nifty futures alone. So that again indicates an unwinding of long positions which could probably have happened for the banking index. And no major change for the Nifty futures open interest as such. So this again indicates that we could probably remain into a range. There is no major skew which is happening from the index traders, even on the option writers front of view. So I think on many of the perspectives, it indicates that the markets could probably remain to a range. The only positive data which happened yesterday was that the put call ratio is entering into the oversold territory. So 0.65 approximately for Nifty and 0.67 approximately for Bank Nifty. So if we fall below that 0.6 levels, I think we could probably get into a phase of a bounce.
Okay. Let's welcome on board CA Rudramurthy as well. Rudra, what is your take? You think another day of consolidation in store for us?
Good morning. Definitely, yes. I see the same thing. Both Nifty as well as Bank Nifty are now consolidating. Having made a big move in the month of November as well as December, I won't be surprised if we see some amount of profit booking, some amount of retracement of this big move which has happened in November and December, which is very healthy for a medium to longer time frame. So for me, for a very short-term trader, these are definitely not levels to go long on index. You have to be very stock specific. I'm still very bullish medium to longer time frame, but only thing is you have to be cautious and leverage has to be cut at these times. You have to move from high beta to low beta. You have to also move to defensive sectors like, let's say, pharma, IT. So these are things which a trader has to make change based on the current market environment.
Let's find out then what trading strategies one should adopt in light of this. Kunal, what's looking good?
So I'll go with a couple of buy calls. Godrej Properties as one of the stocks which yesterday gave a sign of a breakout of a flag pattern. It's a minor flag pattern of almost 50 points approximately for the stock. So expecting a target of 2100 for Godrej Properties. Stop loss could be kept at 2020. And the second would be about ICICI Bank, going contra on the stock, expecting the stock to get into a breakout mode. In fact, yesterday the stock formed a bullish hammer kind of a pattern on the daily charts. So I'm expecting if yesterday's low gets protected on, we could probably be looking at a series of bounce for ICICI Bank also. So we'd go for a contra buy, targets of 1024, stop us at 970.
Rudra, let's get in a sense as to what's looking good according to you on the charts today.
See, for me, Hind Petro looks very strong on chart. This stock gave first breakout at 310, then consolidated, then again 360 gave a breakout. Now it is consolidating. It's a very strong pattern of higher top and higher bottom formation with also support from volumes. Yesterday, we have seen crude oil prices going 3% up. So today we might see OMCs reacting on the downside, but I will use that as a great opportunity to enter. So you are getting a dip because of this reason. Anywhere closer to 400, 410, I'll be a buyer in Hind Petro, looking at initial targets of 445 and then eventually 480, 500 to come on Hind Petro. So I'm keeping a tight stop loss of around 410 for this. For me, GNFC also looks very, very strong. Both the stocks, what I'm referring, are available in futures to trade long. GNFC gave that first breakout at around 760, then 795. And yesterday it gave that consolidation pattern. And now I'm looking at GNFC moving first towards 850 zone and then eventually 1000 rupees possible on GNFC. So I'm positive on GNFC for an initial target of 850 for a future trader. Keep a tight stop loss of 780 and buy the dip in both GNFC and Hind Petro.
Let's talk about stocks which are in news as well this morning. Anisha is here to flag off some. And Tata Motors, Anisha, almost closing in on that 4-digit target from JP Morgan.
Oh, well, yes, the stock is already sitting at record high level, very close to that 800 rupees. And now finally JP Morgan has upgraded the stock despite the run-up that we have seen in the stock. And they have upgraded it to an overweight from a neutral now. And the target price too is increased quite a bit as far as JP Morgan is concerned. Now, in terms of their thesis for this, upgrade coming in, they say that the better than expected margins and the free cash flow delivery that is expected from JLR segment is something which is driving their optimism. They're also expecting the margins to stay, stabilize, is also because in the global luxury market, there has been a bit of a shift that industry is watching out for profitability rather than just volumes, and that's what is a bit of a tailwind for the margins of JLR. As well as if you look at the back home, performance as well in the passenger vehicle segment, the performance has been fairly resilient in terms of the market share, and the balance sheet situation too has improved quite materially after the drawdown of debt which has happened on account of the internal accruals and the kind of cash flow guidance which has come in from JLR as well. Overall, they've increased the FY25-26 EPS quite substantially, that is 20 to 30%, tells you how pretty much behind the curve perhaps the brokerage house was, that they had to upgrade it by almost 20 to 30%, and the target price now stands at 925 rupees, which is 36% higher than what they were earlier factoring in. And overall, the triggers are quite a few in terms of the volume performance as well as the margin performance as well. But the big question, of course, Nikunj, is that autos were perhaps the flavor of last year, right from a TVS to a Tata Motor, everything ran up. The big question is how long can that party continue?
See, 2023, I guess, was an extraordinary year for Tata Motors, and there were triggers which certainly will not repeat in 2024. For example, buyback of the DVR share, Tata Tech listing, big turnaround in the JLR business, and the operating leverage kicked in. This trinity of triggers is unlikely to continue in 2024, which means it's not going to be such a big year. Now, if you're talking about Tata Motors going from the current levels of about 800 rupees to 1000 rupees, it's about a 20% move. But can the 20% move come on the current P multiple minus liquidity? Looks difficult for me in next 12 months. What I think would be interesting for me, Anisha, is that what really will happen to the 2024 passenger car launches in India, because just like the mood point has been dominated in the SUV market by, let's say, Maruti and Mahindra. 2023, it was all about, Harley Davidson and Bajaj Triumph. I guess 2024, I think, would be a classic year of big models which will come from the PV stroke, the EV stable of Tata Motors. For me, that really is the mood point which changes the perception. The stock is not very expensive, so there is still scope for P multiple expansion. So I think rather than making a case that the earning expansion, the trigger for Tata Motors would be strong, I would actually make a case that if there is case for P expansion, which actually will happen largely because of the launches. So I think it is subject to the new launches where the perception would change.
Okay, that's Tata Motors for you, but let's get a move on then and put the spotlight on delivery as well, because it's been an upgrade coming in from Morgan Stanley, Anisha.
Oh, well, yes, the Morgan Stanley brokerage house is quite positive on it. They have upgraded the stock, and the consensus estimates for FY25-26, they believe, are conservative in nature. So they are, acknowledging that in FY24, there could be a further cut to the estimates, but it's going to be very minimal. More importantly, that leaves a lot of room on the upside for FY25-26 consensus estimates. estimates, and that's why they're quite bullish on the counter right now. The stock too has underperformed meaningfully versus the other peers that we have seen in terms of the internet companies. So there is that amount of legroom also available, and also the fact that the logistics company in India are trading at a premium, at a valuation of 18 to 22 times, and Morgan Stanley believes that delivery should command a better premium than that. So they're saying that even in terms of valuation, there is a bit of gap which is available for the company to move forward. They overall expect the company's margins to remain stable going forward in the 9 to 10% band, but that will happen in FY27. And overall, they have raised the target price to around 455. Not very sure about this one, Nikunj, whether there will be a bit of a runaway rally of sorts on delivery or not, and whether this could be a case of Zomato wherein we saw a sudden re-rating that happened.
See, Zomato had a different scenario. Just because it's a fintech, it's a startup, does not mean that, aapka bhi turn aane wala hai. This is not passing the parcel which is happening, that one has gone up, the other one has to go higher. If you frankly ask me, Nisha, with the exception of Concur, which was earlier known as Container Corporation, and maybe TCI Express to some extent, and do that in the long term, none of the logistics stocks have really created a lot of compounding wealth. And whether it is from the Mahindra stable, whether it was the Future Group companies, whether it is really names like Gati or All Cargo, they've not really compounded the way you would have seen them. Because it's a market which is large, it's a market which is growing. The big picture argument is great. TVS Logistics also, if I may throw in one more name, got listed last year, has not created a lot of wealth. It's a tough sector to be in. And when you are a new entrant, even though you may be very efficient and delivery is a brand you resonate well with, I guess it's a market which is still taking some time before you can get the benefits of scale, skills, size and operating leverage. And delivery in a sense has not really lived up to what everyone thought, because the turnaround started happening in all the other fintech and consumer tech, but this is one company where the turnaround in reality has not happened. So they need to demonstrate. Logistics is a sector, has a lot of potential, but somehow it has not really created a lot of wealth. And Kunal, it'll be right? You take out Blue Dart, you take out to some extent TCI Express. None of the...
They've not done
well. I mean, Mahindra Logistics, we don't talk about it. TVS, they took a company public, it was a logistics company, we don't talk about it. Gati is not... All Cargo. Gati, they've not really created a lot of wealth. That's my limited point. I mean, Future Logistics came and went and we don't even know about it. So that's my limited point.
All right. Thanks very much, Anisha, for giving us that take on the stocks that we'll be watching out for in trade today. Tell you what, time for a very short break. Don't go anywhere. We've got lots more news breaks as well as top market voices lined up. Stay with us.
Back with the market right here in 80 now. The handover from the globe has been weak. As we speak right now, Asia is a sea of red all across, and the GIFT Nifty is well indicating that it's going to be a bit of a quiet start. Wobbly it has been surely from the start of the year up until now. That's pretty much the global picture on your screens. Let's welcome on board Sanjeev Bhasin as well and figure out what he's making of the market texture right now. Sanjeev, hi, morning. Good to have you on the show. And, like you were talking about yesterday, it's time to definitely tread with caution. But I want you to really, sort of drill the point home for our viewers that there is no harm in the market consolidating at this juncture. It's only but healthy.
Yeah, good morning, Aisha. Good morning from Gurgaon, 6.5 degrees. So no complaints on markets and the weather. The best time to be in Delhi. Yes, the market consolidation is there, and we had run up to maybe irrationally, and that has seen a little bit of climax. So we've corrected about 400-500 points on the Nifty, which is healthy for the market. I would expect this to end by today. There is an up move of about 200-300 points, which can come today, tomorrow. Tomorrow I'm in Bombay, hopefully in the morning. Aisha, the two things which have happened is one, yes, there were the Fed minutes and other data, but all markets globally had run up maybe too excessively, and there was some bit of profit booking. In the US particularly, I think that Apple downgrade has hurt sentiment on the IT stocks. However, two things have happened. This, unfortunate, devastating earthquake in Japan will now see a lot of long-term money buy this opportunity. In fact, I would say that this is the time to be upweight on certain, where you are getting these type of, unforeseen sell-offs. So I think Japan will be a key market which will see a lot of inflows because of this one-off event. And I would expect India to be, slightly bit of an outperform. I'm again amazed at the strength in the mid caps. Yesterday, again, the mid cap index was up. So we are not complaining. All we are saying is that there will be a sectoral churn. I think now it's the time of banks to come back. And if you are looking for an opportunity, then use this next few days weakness in metals as a proxy to the dollar to buy. So I am expecting today afternoon the market turns, and God willing, tomorrow we should be in the green.
So since you're talking about metals, any names that you could give our viewers?
Tata Steel and NALCO. As a disclosure, both these are in our portfolio from, of course, much lower levels. But if we want to play both the aluminium and the steel cycle, it has to be Tata Steel. Tata Steel has consolidated for over 3 years after that one-off move to 150 or maybe 2.5. And now, it's looking set to cross that 150 mark, 175. I think Tata Steel has actually lagged the rest of the pack, the sales of the world. And now, given that Chorus is seeing a lot of traction on the upside, their local business are doing extremely well. I would say Tata Steel and NALCO are definitely an add on declines over here.
All right, add or on declines, that's the strategy for some of the names. Stay on with us, Sanjeev, lots more to discuss, but as promised, we've got lots more news stories, and Grasim, we understand, is likely to hold a board meeting today, and they're going to consider a rights issue of up to 4,000 crore rupees. Now, this is according to the ET Now sources, and we understand that Vodafone Idea is set to get a massive fund infusion from the Aditya Birla Group as well as the overseas investors. Let's take it across to Anurag Joshi, who joins in with the latest. Anurag?
Grasim Industries is scheduled to hold a board meeting today to consider a rights issue of up to 4,000 crore rupees. Now, officially, Grasim and Aditya Vikram Birla Group have maintained that the use of proceeds from the rights issue would be primarily to fund the capex for the paints and the chemical business of the group. Though speculation has been there that the money would be used to fund Vodafone Idea. Now, in August, Vodafone Idea had informed the exchanges that it is assured of financial support of up to 2,000 crore to meet any impending financial obligation or any kind of cash requirement. And Vodafone Idea at that time did not mention which promoter entity had assured this, but again, the speculation is that this funding is expected to come from the AV Birla Group. Now, Vodafone PLC, which is the other shareholder in the venture, that's holding 32%, and I mean that has not given any commitment for funding Vodafone Idea. While there is a possibility that AV Birla is likely to provide funding to Vodafone Idea.
Thanks very much, Anurag, for giving us those latest details. So in line with what we've been maintaining with respect to the fund infusion for Vodafone Idea, and as per sources, we understand that that could happen today as Grasim Industries mulls that rights issue. Sanjeev, let's get in your thoughts and wanted to understand what the outlook is on the overall FMCG sector. You know, we've been talking to a lot of guests as well as corporates, and it seems like rural demand seems to be quite weak, and volume growth, which has been impacted in the December quarter for a lot of these FMCG companies, is likely to further continue to remain rather muted. Is that a worry?
Well, we know that the base has been higher and there has been a definite slowdown. But I think it's part and parcel of the growth trajectory. So except Lever, we are bullish on Nestle is our top pick. We like Colgate and we like Marico as a dark horse. These three names in that order. We have them in our portfolio and we will stay with them. Avan, there is a sectoral change. So when you get into high beta stocks on the PSU side, generally there will be some brokerage note which is negative on FMCG, and we know FMCG has been a little bit of a laggard. But we want to be with the leaders. I think Nestle is setting new highs. I've had this in my portfolio from 6,500 levels, and I don't intend to sell it. I think Colgate is only gaining market share, and Marico could be the dark horse, which is a very good play on the Parachute hair oil, which I think is gaining more and more market share. So we would keep it in those three. A lever is an avoid for us.
View on FMCG as a whole, and where do you stand when it comes to Tata Motors in specific? I know you have your preference towards an Ashok Leyland within the auto space, but given that there are expectations that we could see JLR strengthening their margins going down the line, the balance sheet deleveraging, reducing, what is your outlook on Tata Motors?
Well, technically it's been the star of the auto pack, and auto has already been in a huge perpendicular upside. So I think Tata Motors will continue to be in that space, but we don't find the valuations attractive enough. Like I said, I would put more money on Ashok Leyland. Now these are left out feeling by few large brokerage houses which have underperformed on the Tata Motors side and which were bearish. Of course, turning bullish after a doubling is very, very difficult for us to sustain. We think a large part of the volume growth is already in the price. And you're talking now of China comeback. If China is going to come back, I would rather play the metal cycle. I think that is a very good proxy to that. We continue to be overweight Ashok Leyland. Tata Motor is in our portfolio.
Another interesting note from delivery as well, or rather Morgan Stanley on delivery. They've upgraded the stock now to an overweight from the earlier equal weight, up the target price as well. And they are saying, Sanjeev, that they see improving growth trends in the express parcel business. But you think delivery should be the best of the lot as a pick?
Aisha, I think there is a lot of competition in this space. These new entrants look attractive because they are in that pedigree of the, everyone tries to ape Zomato and in the businesses. But I would expect a lot of more margin pressure to consist. I am not that optimistic on delivery, but I am very, very bullish on Zomato, Paytm and PB Fintech in that basket of fintech stroke, unicorns. I am very, very optimistic on those three stocks. Delivery is something I will give a miss. But I am again reiterating, don't miss this opportunity of getting into Paytm, PB Fintech and Zomato on any decline.
Let's understand the chart readings. Maybe Kunal, have you had a look at Zomato, Paytm, PB Fintech on the charts?
So yeah, I think PB Fintech closer to that 800 mark looks to be an attractive proposition. The stock has done reasonably well. It's a comparatively low volatile stock as compared to the other, two, not exactly peers, but two similar space stocks for Policybazaar. So that's one stock which looks attractive. Zomato, I think closer to 120, 130 range has been consolidating. So, there's no major change in terms of the volume data for the stock price. It's just gone through a very strong uptrend and it's just now staying at those higher levels. So which means that the stock is consolidating at a higher level, which again is a good sign for the stock, because when the stocks consolidate at a higher level with no major change in terms of volumes, we still expect the trend to continue for the stock. Paytm on the other hand has been a bit all over the place in terms of the price trends. The stock, which was almost at 850, 900 sometime back, has fallen down to sub 700 levels. Even at current levels, there has been bouts of recovery or rally for the stock price, but it's not really engulfed into a major uptrend for Paytm. So I'll probably wait and watch the stock at current levels. Would not probably want to jump in till the time the prices settle, rather the volatility settle and the prices go into a trading range.
That's that on the fintechs, but channel checks are suggesting that chemicals have experienced some price changes on a month-on-month basis. What's going to be the impact on the chemical stocks? Samit is here to explain that. Samit?
Well, on a month-on-month basis, in the month of December, if you see, crude prices have corrected, which have led to correction in the chemical prices and also contraction in the spreads. Now, when it comes to chemical prices, firstly, acid prices are up around 4.4%, and this is positive for GNFC, but negative for Lakshmi Organic and Jubilant Ingrevia. When it comes to caustic soda, that prices are down by around 1.3%. Now, this is positive for users like Urban Mills and GNFC, but negative for manufacturers like Grasim, DCM, Shriram and GACL. Apart from that, soda ash ash prices. Now that is important for Tata Chemical and GHCL. Now these prices are up 22%, but do remember that there is a disconnect between China prices and Indian prices due to local demand supply dynamics. So hence we'll have to wait and watch how Tata Chemical reacts to this increase in global soda ash prices. When it comes to phthalic anhydride, prices are up around 2.5%. Now this is positive for Thirumalai Chemical and IGPL. Palm kernel oil prices are down around 1.1% on a month-on-month basis, and this is marginally positive for a user like Galaxy Surfactant. When it comes to spread, firstly, the caprolactam and benzene spread is up around 10 odd percent. Now this is positive for a user like GSFC. Ethyl acetate and acetic acid spread has contracted by around 2.5%, and this is negative for Lakshmi Organic and Jubilant Ingredient. When it comes to acetone and benzene spread, that has also come down by around 1.9%, and it's negative for Deepak Nitrite. PVC VCM spreads have come down by around 4.2%, and that is negative for Chemplast Sanmar. And lastly, TDI Toluene spread has expanded by around 1.1%, and this is positive for GNFC but slightly negative when it comes to a user like Sheila Fo.
All right, thanks very much for giving us that heads up, Sumit. Sanjeev, maybe we can get in your take then on some of these stocks within the entire chemical space. How are you looking at the overall, what the channel checks are indicating and what it means for the likes of a Lakshmi, Organics, DCM, Shriram, etc.?
So, Avan, we've been rather contrarian on this sector in the last 2 months, and 3 of our picks have done extremely well. SRF, Aarti Industries, and Tata Chemical. Tata Chemical close to 950, SRF close to 2170, and Aarti at 465. These 3, I think, will outperform the market. You can add a Navin Fluorine on decline, but I think these 3 stocks will outperform. You see, a large part of the plateauing of prices, one up, one down, is just a transitory effect. I would expect China to bounce back, and that will be the real trigger for some of these stocks to do well. But a large part of the negatives is already priced in, at least in the earnings. The earnings now seem to be very positive. And if you see the price of GNFC, the stock from less than 680 is almost touching 800. So continue to be positive on SRF, Aarti, and Tata Chemical, which are in our portfolio.
Specific name here, Vaibhav Global. I'm talking about it. Why? Because volumes yesterday were 28 times more than the 10-day average. Anything that comes to your mind? It's there in terms of the volume buzzer list which I have.
So the stock, since I think September is where the stock had made a high for itself, a swing high. I'm not saying an all-time high, swing high of 460 approximately. From September till yesterday, the stock has been going through a price-wise and a time-wise consolidation. Now the good part is that the stock has come back above the 50-day moving average yesterday, and the other positive part about the chart is that even in this last 3 months, 4 months of consolidation, the stock has not broken its 200-day moving average. So what we typically look out for is a breakout of this flag pattern. So yesterday was the first sign where the volumes shot up higher. If the prices see a follow through and if it sees a breakout, that's what we call it as a price volume breakout for stock prices. That level I think is closer to 460 for Vaibhav Global. So I think if the stock manages to cross over another 30 rupees on the upside, it could probably challenge this 460 mark, and that could lead to a very strong multi-month uptrend, because the stock has been beaten down from 2021 highs of more than 1000 plus levels. So for the stock to recover and get into an uptrend, it has to break past about this 460 level.
Sanjeev Pasin, let's close our today's interaction, morning interaction rather, with a view on pharma, because barring one or two sub-revenue streams in pharma, the US generic market is looking challenging. And I was reading a great report from Bernstein, I think a couple of days ago, which specifically mentions that the year there is elections in the US economy, or in US, Indian generic companies, they tend to underperform.
Well, is glass half full, half empty? The valuation comfort on some of the stocks was very, very strong. Plus, Nikunj, the smart money actually was underweight IT and overweight pharma over the rupee effect, the dollar, index. And thirdly, I think large part of the pricing weakness is priced in. Companies themselves have geared up to that and have explored new geographies and so on. Aurobindo, Dr. Reddy, Cipla, and Lupin have been 4 which have performed brilliantly. Now, Aurobindo takes the cake because of injectables and so on. But I think there is still room on the upside, given that after on an election year, generally, you know that some of these roadblocks ahead are temporary. So I think that now their shape in the shape of becoming truly global companies is very much on the cards, and some of the manufacturing part is actually catering to that. So the China effect is slowing down, and India itself is gearing up to a lot of these companies now becoming manufacturing hubs for the larger play. And I still think Pharma Index has been an outperformer and can outperform on the back of proxy to the rupee and on the back of being a defensive sector, which in the current volatility stands out. Even, by the way, Apollo Hospital, which was my top pick at 48, 47, 100, has hit a new high. So it's telling you that smart money has actually gone into that chain. So Apollo Hospital and KIMS are two other stocks which are in our portfolio and which have done exceedingly well.
All right, Basi Saab, appreciate your time. Thank you for joining us. Hemang Jani, good morning. What are you telling your clients? How should they approach the month of Jan?
Good morning, Nikunj. The start appears to be pretty decent. Having seen a very strong rally last year, I think the structure of the market continues to be good, whether it's the crude oil, the interest rates environment, and most importantly, Nikunj, the earnings that we are going to see, starting from today. How it pans out is something that remains to be seen. But our overall sense is that though we might see a little bit of sideways movement or a bit of a profit booking, the broad structure of the market continues to remain good. We'll have to do a little bit more hard work in terms of what are the pockets of opportunities, both in large caps and mid caps. But a lot of, expectation, a lot of opportunities.
Can you be specific?
So, Nikunj, when we look at this year, there are four broad categories where the earnings growth is going to be very strong. First is capital goods, about 30% kind of a growth. No doubt the valuations are on the higher side. Banks is one pocket where you will see a 30% growth with the comfort on the valuations, and the sector also has underperformed. Healthcare would be third pocket where we see a very strong earnings growth of 35%. And lastly, telecom. I think this is a sector which not many people are talking about. But, in terms of earnings for 24-25, it will be one of the best performing sectors. So these are the four pockets where we would have a positive bias in terms of earnings.
I wanted to get in your take on the kind of Q3 updates we're getting, in particular from the likes of a Bajaj Finance, where they have seen their overall deposit growth up 35% on year. IndusInd Bank, which has been fairly encouraging with a deposit growth of nearly 42%. What is this indicative of?
I think Bajaj Finance has gone through its own sort of, negative developments, both from regulator and with the episode, with the RBL Bank in terms of credit card. So now that the business update is out, I think it looks pretty decent. What remains to be seen is what kind of growth one can really expect this year from Bajaj Finance, given the fact that it's trading at a very high valuation. So I like the stock, I like the legacy, but the valuation being on a higher side, I would be comfortable entering into it at a correction.
Kunal, let's divide the market into two parts. How much we rallied because of global cues, which is Fed, and how much we rallied because of a local factor, which is election result. One factor is reversing, the US interest rate and the bond yields they are spiking. So how much weightage would you give to global in the month of December for the rally, or how much was local?
Well, very, very tough one, Nikunj, but I think it's a very good question as such, because the markets, of course, so what we started off from 26th October was 20th of October, I think was the time when the index had formed a low. What started off was a process of a global rally, which started off for many of the emerging markets as well as the global markets, which managed to bounce back. Dow made a new high, Nasdaq made a new high for itself, or I think I was on the verge of making a new high for itself. S&P's managed to do it. So I think it was a good global rally which shaped up. Dollar index fell from, I think, 106 levels to 101 odd mark for itself. So there was a global construct, but even in the last couple of days, it's not as if that the global rally has gone into it's gone into a correction, but it's not gone to a bear market signal as such, because dollar index has just gone through a bounce from 100 to 102. Now the breakout as such would be closer to 106 for dollar index. So yes, the global markets are falling or maybe correcting in line with our markets. Maybe some part of it is completely correlated or linked to the global markets from our market point of view. But I would still not be very much concerned, because the signals over there, I was looking at most of the charts, crude oil is still hovering at the lower end of the ranges for itself. So I think most of the charts are still signaling that we could probably be getting into a tepid kind of a range for most of the indices. But as of now, no major signal across the globe, across the indices, that trends are reversing for many global markets.
Nasdaq has fallen and Indian IT stocks have fallen. The companies are different, but the pattern is always the same. Would you avoid IT given that Nasdaq is not off to a great start?
I think more than Nasdaq, Nikunj, as you rightly said, that the structure of the index and the composition of that index is very different from what we have here. But the fact of the matter is that this quarterly results are not going to be anything great in terms of surprises for the IT companies. And while we are not talking so much about IT as a space, the fact of the matter is that last whole year, the sector has done pretty well, about 23-24% kind of a uptick from January. So I would be comfortable entering into these stocks once we have slightly more color in terms of earnings for next year. While people do hope that the growth is going to be 10-12% for large caps, maybe mid caps about 16-20%. We really want to see what managements are saying at this point of time. And we would avoid at least till there is a clarity on the earnings.
Rudamurthy, one sector which has done rather well for itself is oil marketing, OMCs, in the month of December. Is there some more headroom left for HPCL, BPCL, IOC?
Definitely, Nikunj. For me, Hind Petro looks very, very strong. This stock has first given a breakout at around 310, made the up move till levels closer to 380, then again consolidated, again took support at that 360 zone, and now it is making the next big move. So for me, this is a stock you have to buy on every dip. And for me, crude medium to longer time frame is still negative. Keep aside yesterday's up move of whatever 2-3% what you have seen. Use these opportunities to buy into OMCs. So for me, Hind Petro is the top pick among the OMCs, and even IOC, Indian Oil Corporation, looks very, very strong. And see the amount of consolidation these stocks took before, and now they are making a move after that big consolidation. And for me, the steam is still not out. It is still there, and further up move can be seen in stocks like IOC. I won't be surprised to see a move of around 50-60% kind of a move in this sector in general. And stock specific Hind Petro and IOC for a year's time from now can give a move even closer to that 60 to 100% kind of a bracket. I'm very, very bullish on this sector, and my top two picks here will be Hind Petro and IOC.
Hemang, wanted to get in your take on the capex related theme, given that it is a critical election related here. Do you think that macros will continue to remain favorable, and therefore one can look at the entire manufacturing and capex related theme favorably? Where are you sensing opportunity here?
So Avan, while we do feel that this year again, the growth in terms of earning at an aggregate level be around 30%. What we should understand is that the sector has really done extremely well in the last 1.5 years, and the stocks have really gone up quite a bit. We have seen it across. So I would be comfortable buying into the stories where there is slightly more degree of comfort. So maybe something like L&T, Thermex, some of the defense companies, Bharat Electronics, BML. I think these are the pockets where we have a slightly higher degree of conviction when it comes to earnings. So we'll stick to those.
Stay with us, and with the new year setting in, we caught up with some of the top market honchos, the likes of Ravi Dharamshi, Hiren Ved, Sridhar Sivaram and many others. Let's hear out some important excerpts from their conversations.
A couple of the leader banks not giving any kind of a return creates the perfect base for you to start thinking of placing bets in terms of from 3 to 5 years perspective. So I am again, without naming anyone, the cycle in financials remains in favor. Large lending, the private banks remains favorable. The capex cycle is just beginning, the private capex cycle. The corporate lending growth will pick up going forward.
I think the second area which we've been talking about is, as I said, if you can put it all in the bucket of manufacturing or cap goods, infra. I mean, that whole pack, power, real estate, renewable energy. I think you find companies, quality companies there, and I think you could compound at 20, 25, 30% a year for the next couple of years, right?
EMS as a space, whether it is +1 or not, is going to boom anyway because the electronic component in our daily lives is significantly going up. Now, having said that, these stocks have rallied a lot. So it is not as if they have not rallied. Their earnings will also grow, may not be structural, may not be like every quarter it grows. So you will see surprises here. Those are the opportunities to buy.
Hemang, what would you do with the EMS stocks? I mean, they were the toast of the town for 2023, whether it was Dixon or whether it was Shirma or for that matter even Keynes. Would you continue to ride them?
I think, for incremental money, I would not be comfortable allocating to this theme because a large part of that positive is pricing. Dixon, we've had some positive, news flow around production that they can possibly get from the mobile phone and high margin categories. So if you see some 10% kind of a cut on Dixon, surely it is something that we would be comfortable looking at. But by and large, now that theme is so very well discovered and the prices are not so cheap, Dixon is quoting at some 50, 55 times. So not too comfortable, putting incremental money at these levels.
Fair enough. Meantime, let's also get in a take then on the outlook on the IT space as a whole then. And given that most of the brokerages have been looking at rating changes, upgrading the IT stocks, and the year gone by has been fairly tempered. Hemang, what does 2024 hold in store for IT top bets?
As I said, this quarterly earnings season will not have any material positive surprises. And let's say in case of the large cap names, the growth could be in the range of about -0.5% to about 1.2% on a quarter-on-quarter basis on constant currency. Mid caps, we will have to be slightly more, stock specific as to what companies deliver because, you have persistent system and KPIT and those names which can possibly surprise also on the earnings front. But I would be more comfortable playing this theme post results based on what kind of surprises do we get in the numbers.
Sure. Meantime, let's also get in some chart checks going then. Just about a couple of minutes to go for those pre-open rates. And yesterday, some of those metal stocks buckling under pressure. Rudra, what do the charts indicate?
See, yes, after making that big move in metal stocks, most of them had a very, very good move. They're now just consolidating. So for me, metals will definitely do good. You have to be stock specific. So if I see even counters like Tata Steel, and even if you pick up Hindalco, Nalco, these are all stocks which have done very, very good. So having seen that very big move, now they are just consolidating and it's an opportunity for someone to just enter into these counters on dips. So for me, pharma looks very strong, metals look very strong, and even IT looks very strong. Might be I'm sounding a bit defensive, but these are places where still value is available, and use these dips in metals to buy into your portfolio. And I won't be surprised to see these three sectors being the top performers in 2024. And specifically from banks also, SBI even at current levels offer good valuation comfort as well as chart comfort to me. So for me, stocks like SBI and even from metal pack, the names whatever I've told, and in pharma, look at Sun Pharma, look at even Lupin, look at Oro Pharma, look at Glenmark. All these offers great value. So for me, large cap will move like mid and small cap in 2024, and you have to be in this sector and these stocks which I've mentioned.
Right, okay. Hemang, we'll let you go on that note. Thanks as always for joining in. Let's just mark those pre-open rates as well. It seems like it's going to be a bit of a tempered start, much in line with the rest of the globe. Of course, a lot of stocks as well, which are going to be in focus. Bajaj Finance after its quarterly updates. There's L&T, wherein there is a Nomura upgrade coming in. They've upped the target price to now 4,000 from the earlier 2,770, which of course the stock already crossed past. And then an upgrade coming in on Tata Motors as well, upping the price target all the way to 925. That stock also will just come off your screens, almost 2% higher for that particular stock. And Torrent Power, wherein they've signed an MOU with the government of Gujarat for a price consideration of 47,350 odd crore rupees. That's Torrent Power in trade. But let's get in some mid-cap ideas as well on that note then. Kunal, what's on your list?
So yesterday, Manappuram Finance was one of the stocks which was on the verge of a breakout of a consolidation above 170 to 73 mark. So expecting the stock to get into that breakout mode and end the consolidation, which has been lasting for a few days. Buy with a target of 185. Stop loss could be kept at 169.
Okay, and Rudra, what about your stock strategies from mid caps?
See, for me, Glenmark Life Science is a stock which is looking very, very strong. Look at last 2 days volume and the price action, which is clearly indicating to me that after a long consolidation, this stock has given a breakout clearly above 675. So for me, Glenmark Life Science looks very, very attractive. Look at initial targets of on Glenmark to come at around 800, and for me this is a stock which will move towards that 4-digit figure of 1,000, keeping a tight stop loss of around 700 on closing basis. I will be a buyer in Glenmark Life Science for a target of 800 to come initially and then to 1,000.
Okay, let's take a very quick break. By then, we'll have the pre-open rates settle down as well. It's actually a green tick coming in and marginally higher as we speak right now. We'll analyze how the markets are set to open after this short break. Back with first trades right here in ET Now, and the first trades for the pre-open trade have settled in actually higher, much defying the rest of the global momentum this morning, which is clearly on the downside. About a 0.5% uptick is what we are counting towards, 21,600 for the pre-open trade. But let's tell you what else is happening outside the world of equity markets, and at least 103 people have been killed so far by 2 bomb explosions near the tomb of Iranian General Qasem Soleimani on the 4th anniversary of his assassination by the US. Scores of others were wounded when the blast hit a procession near the mosque in the city of Kerman. Also, the death toll from a series of powerful earthquakes in Japan on New Year's Day now rose to 73, even as the search for survivors under collapsed buildings continued for the 4th day. More than 33,000 people have been evacuated from their homes, while over 300 have been injured so far. And also, the FSSAI has issued a show-cause notice to private airline Interglobe Aviation following a passenger's claim of finding a live worm in its sandwich. The incident reportedly took place on Delhi to Mumbai flight on December 29th. Indigo says that they've replied, in fact, saying that it will respond to the notice as per protocol. Also, winter chill continues in northern India. Several trains and flights have been impacted in Delhi amid low visibility due to dense fog. Dense to very dense fog conditions are likely to prevail in many places, including Delhi, Haryana, Punjab, as well as Uttarakhand. And it's time to get you all the buzz and khabar on D Street. And Shyam Metallics, they've launched a QIP. What's the buzz all about? Let me take it across to Sharad and find out exactly that. Sharad?
Well, the buzz in the street for Shyam Metallics is that a strong response is coming in from the institutions for its QIP issue. Now, the QIP issue size is roughly 1,300 crore rupees, and strong interest is coming from the domestic mutual fund houses as well. Now, the stock itself has been in a tear, rising almost 54% since October lows of last year, and the management had stated that they would be looking at a timeline till June 2024 when it comes for the fundraise. Now, importantly, there has been an important development coming in, is that the promoters would be selling their stake to comply with SEBI norms. Currently, they are holding 82% as per the September shareholding pattern, and they have around 10 to 11 months to reduce it to the 75% because of the minimum public shareholding norms. Also importantly, recently in an interview with ET Now, they had stated they are expecting commissioning of the blast furnace coke oven by March this year.
Okay, that's Shyam Metallics. The pre-open rates indicating a positive start for that counter. But a slew of brokerages are keeping the IT sector on their radar. What's their stance on individual stocks? Let me take it across to Anisha and find out exactly that. Anisha?
Oh, well, yes, IT sector clearly has the street divided. A lot of upgrades as well as downgrades coming in within the sector itself as well. There are very stock-specific bets that the analysts are taking. So let me run you through the key ones at that. JP Morgan has actually come out with a fresh note. They've upgraded TCS and HCL Tech to a neutral now, and they've hiked the target price quite substantially as well. For instance, for TCS, it's all the way up to 3,700 versus 2,900 that they had done earlier. It's also a bit of a catch-up to the kind of stock price move that we have seen, but nonetheless, a change in the stance happening. Infosys as well as L&T Tech are the couple of stocks that have actually increased and upgraded their stance to an overweight, and the target prices too have been substantially increased. Take a look at L&T Tech. The target price now stands at 5,800 versus 3,200, so almost doubling of the target price on L&T Tech. There's also upgrade coming in Persistent and Emphasis. However, having said that, they're maintaining the underweight stance on Wipro, Tech Mahindra as well as LTI Mindtree. UBS also has come out with a fresh note on the same. They have hiked the target price on Infosys. They've actually upgraded it to a buy despite the kind of underperformance that we have seen from the stock. Wipro, however, seems to be a consensus downgrade coming in because UBS too has downgraded the stock, and they are now suggesting a sell on the same. We have TCS, HCL Tech that they maintain a neutral on. Tech Mahindra is something as well that they have a sell on. You also have Morgan Stanley today that has come out with notes. So clearly IT on the radar of a lot of brokerage houses. There they have downgraded HCL Tech and LTI Mindtree purely because these two stocks have run up substantially. They have maintained the overweight on Infosys and Cyient, a bit of a price uptick coming in there. And as far as the others are concerned, the likes of TCS, Emphasis, even the others, they are maintaining their call, a bit of tweak happening in the target price. But the broad call seems to be coming in that this quarter is going to be weak, so don't expect too much. But it's about FY25 going forward and the kind of consensus changes that are happening on the estimates there. For instance, for Infosys, because the base is low, there could be a higher jump in FY25, and that's what the street is factoring in because valuation-wise, they're not very, very cheap. But nonetheless, there is some room available clearly.
All right, thanks very much, Anisha, for giving us all of those details. That's the latest brokerage note coming in on the IT space. Let's move right on and revisit the editor's stake. Tata Motors in the spotlight. Remember, JP Morgan has upgraded the stock to an overweight rating from neutral despite the recent run-up. What does this mean? Let's hear out Nikunj's view.
See, 2023, I guess, was an extraordinary year for Tata Motors, and there were triggers which certainly will not repeat in 2024. For example, buyback of the DVR share, Tata Tech listing, big turnaround in the JLR business, and the operating leverage kicked in. This trinity of triggers is unlikely to continue in 2024, which means it's not going to be such a big year. Now, if you're talking about Tata Motors going from the current levels of about 800 rupees to 1000 rupees, it's about a 20% move. But can the 20% move come on the current P multiple minus liquidity? Looks difficult for me next 12 months. What I think would be interesting for me, Anisha, is that what really will happen to the 2024 passenger car launches in India, because just like the mood point has been dominated in the SUV market by, let's say, Maruti and Mahindra. 2023, it was all about, Harley Davidson and Bajaj Triumph. I guess 2024, I think, would be a classic year of big models which will come from the PV stroke, the EV stable of Tata Motors. For me, that really is the mood point which changes the perception. The stock is not very expensive, so there is still scope for P multiple expansion. So I think rather than making a case that the earning expansion, the trigger for Tata Motors would be strong, I would actually make a case that if there is case for P expansion, which actually will happen largely because of the launches. So I think it is subject to the new launches where the perception would change.
All right, there you have it. That's the editor's take. But what about index calls then from our charters? What are they advising after yesterday's consolidation? Well, Kunal says it's a buy on dip strategy in this market, while Rudra believes that as of now, no trade on the Nifty. The view on the Nifty bank as well is a buy on dips from Kunal and no trade from Rudra.
Okay, getting set then for the market open, and while yesterday it was all about that big spike in Bajaj Auto as soon as they announced a buyback, or the fact that the board is going to be meeting on Jan 8th to mull a buyback, that was one of the big movers. Today as well, it's seeing that momentum continue. And yes, the sporadic moves in some of the pharma names, case in point being Biocon, or for that matter, Spark. And then, of course, the big move that you had in the likes of Bandhan Bank and Can Bank, they were the ones which were holding out very smartly. Which, Kunal, brings me to the smaller PSBs. Any trading opportunity here? I mean, yesterday you had a Canara Bank, for instance, which held out quite okay.
Well, yeah, in fact, many of the PSU banking stocks are actually showing signs of momentum coming back to them. I'm not talking of just the large cap names or the more prominent ones like Bank of Baroda, which is at a multi-month high for itself. Canara Bank, which has also confirmed the same for itself. SBI is trading closer to that 650 odd mark. But even the likes of Central Bank, I was looking at the charts for many of the other names in the mid cap. IDBI, I think, has seen some good price volume action over the last 3 or 4 trading sessions. So there's some sort of activity which is brewing up into these spaces yet again. Bank of India is another stock, Union Bank is another stock which has managed to see some price volume action. So which means that this sector is getting back into a breakout kind of a mode. If large caps or the more prominent ones, if they continue to move up high, like what we saw yesterday for Canara Bank, moving back to that 450, 460 levels for itself. If SBI also manages to give that second leg of a breakout, about 650, 660 mark, I would believe that the other smaller cap or the mid cap names could also try and chug along.
All right, fair enough. And let's get in a take from you then, Rudra. Just owing to the way we did see some of those PSU stocks pan out, what's the outlook on the charts of the PSBs as well as some of the PSU stocks?
I'm very positive now. Having made a big move on the upside, these stocks are now consolidating and again giving a fresh breakout. So for me, even SBI at current level looks very, very strong. Canara Bank is also very good. So these PSU banks can do very good even from current levels. So for me, the top pick from the public sector bank especially will be State Bank of India, looking at targets of around 750 to 800, and that's an upside of about 20-25% even from current level available in future. Every dip has to be used as buying opportunity. Yes, I agree with Kunal. Even Canara Bank is very strong to me, can move towards those levels of 485 to 500 very soon. So any dips on this, I will be a buyer. And if you also look at other stocks from the public sector enterprises, if I see a lot of good ones are still available for me, especially if I want to pick up stocks like even BEL, BHEL. These are all stocks on any dip will offer a great buying opportunity. So still bullish on these stocks. Now they are consolidating. Use any dip as a buying opportunity in them.
And just about 20 seconds to go for the market open today. In light of the kind of consolidation we witnessed, perhaps, Nikunj, that'll be the order of the day, but a healthy one at that is what we're anticipating.
It's going to be a decent start, and a decent start when exactly global handover is not strong, yields are jumping up again. Are we likely to chart our own course? It's just been such a grand year for us. 2024, if you just want to say if status quo also remained, that no one's going to complain a lot. First rates on your screen, I'm just going to mark them very quickly here. First rate 75 points higher for the Nifty. The market breadth is looking phenomenally better. Bajaj Finance, the dispatch in terms of what we got, not dispatch, but what we got as a Q3 update, I think was good. Despite Reserve Bank of India communication to them, Bajaj Finance is still growing, IndusInd Bank is still growing. So banks which are the centerpiece of the real harbinger of economy, if they continue to grow, which means fresh credit formation has just not plateaued or has just not stalled. Tata Motors big upgrade has come. Hotel stocks, they've done rather well for themselves, Lemon Tree or Indian Hotels. And if one has to really look at the star performer, yesterday was Biocon. Is it picking up from where it left yesterday? Let's look at it. Is Biocon picking it up from where it left yesterday? Yes, it is. So the market breadth, the tone and tonality of the market market reaction to some of the quarterly update, all of them are moving up in a very synchronized manner.
Yes, they sure are. About 1% higher for Biocon. This is in addition of the big pop on the stock to the tune of 6.5% on futures that it saw in trade yesterday. Bunch of other stocks, Nikunj just highlighted Bajaj Finance as well. Their quarterly update is impressive. They've actually seen the best year-on-year AUM growth in about 16 quarters, and that's an uptick of nearly about 35% that they've posted. 3.25 solid move coming in on Bajaj Finance to start off trade. There's news on Vedanta as well. Vedanta Resources have got the bondholders nod now to restructure 4 series of bonds. So look out for that stock as well. Holding up higher, 1.5% as we speak right now. There's an acquisition coming in for Dr. Reddy's. They've acquired Menolabs supplements portfolio from Amyris. Dr. Reddy's though starts off a little bit tempered. For IEX, the total December volumes have seen an uptick of about 15%, and there's been a market share gain as well, about 1.5% higher for this one. There's also Torrent Power. They've signed 4 MOUs with the Gujarat government worth 47,350 crores, 6.5% higher for Torrent Power as we speak right now. Having said that, for IndusInd Bank, the CASA ratio actually has been the slowest in about 27 quarters, and the year-on-year deposit growth as well has been the lowest in about 6 quarters or so. IndusInd Bank starts off absolutely flat as we speak, and I think sale is going to be an important one because the divestment of Salem Steel has been called off by the centre. The announcement came in just last evening, 0.7% higher for sale as we speak right now. But for the market, it's not bad a start. It's pretty quiet. We're still sub the 21,600 mark. But yeah, better off than the rest of the globe, Nikunj.